Breakfast.
The voice of the creative economy.
With Vincent Heeringa.
Yes, he joins us this morning. He's on the move. Good morning to you, Vincent.
I'm en route, if that's okay. Talking on my mobile.
Public transport?
Actually, not today.
Oh, okay. All right.
Where I'm going, the buses don't go.
Oh, I see.
Yeah.
A journey of discovery. Perhaps.
A journey through Auckland's fog and traffic.
Yeah.
Delightful.
All right. Well, let's change the subject entirely to Generation C and the future of banking. Why technology is even forcing banks to worry.
We don't often talk about banks except in the context of, either the banking collapse and the shenanigans around Wall Street and the derivatives and so forth, especially in an innovation context. In fact, innovation in banking is kind of perceived as bad right now because it's the very innovations in the way that they have managed their money through, the derivatives and the secondaries and tertiary markets that have caused so much trouble. So, kind of surprising then to read in Ideologue an article all about why banks need to innovate and the threats that they face from innovation. But this time it's not the kind of innovation that is, kind of at the trading end or at the kind of Wall Street end. It's more in the consumer end. And it turns out that New Zealand is quite an operator in this space. There are quite a few very interesting companies. So the writers of this article, Jake Pearce, who is a marketer and a bit of an expert in Gen Z stuff, he wrote our original Gen Z article that was quite defining, I thought. And Simon Young, who's an expert in social media, have written a piece all about the change that is imminent in the way we experience banking.
So do they say that banks as they are, traditional banks, could become irrelevant?
Well, that's one possibility. It's kind of doubtful because actually there is such a momentum with banks as the holders of money and as kind of the administrators of money that they are quite well positioned to benefit from the innovations that are happening around the periphery. And here's just a few of the kind of dynamics that you'd expect. Now, Gen C, just quick explanation, Gen C is a definition of a kind of consumer who is very internet savvy, is very mobile, and is very much into personalisation. So, make it for me, make it bank me rather than BNZ or ASB.
Okay.
And, these are the people who are on Twitter. They are managing quite complex social webs through Facebook or, through various social media outlets.
But I wonder what they mean by bank me when I would think bank me is money underneath the mattress.
Well, that's actually quite a nice analogy. Let's take that and look at it in a technology context. So one of the dynamics is mobility. And in this space, the developing world is pretty interesting because without a big banking infrastructure in Africa, for instance, the mobile phone has become the most common form of banking or transferring of money. So there's a huge amount of transference of credit across mobile phones. And there's an outfit called M-Pesa, which is a Vodafone initiative, which effectively is a bank, and you simply trade credit across phones. And in this area too, there's a Kiwi company, Mcom, which has a product called Bank Anywhere, which is a mobile platform for transferring money between institutions, but also between yourself, from one person to another.
But is there any interest accrued in anywhere along that line?
I don't think it's as sophisticated as that.
No.
I think that it's mostly it's not so much about maybe there is. I don't know that enough about it to talk that much in depth, but I do know that in Canada, for instance, there is an outfit called ZoomPass, which is a combination of a bank and a mobility and a telco to really create quite a formal mobile banking system. Using the mobile network. And another dynamic is this kind of peer-to-peer thing. So, social networking is a lot about cutting out the middleman and me talking directly to you through some sort of, Facebook or a Bebo, bless its heart. And again, in that banking area, there's some quite interesting initiatives. One is an American company called Prosper.com, and that's basically me lending directly to you without a bank. So there's no bank involved. It literally is me transferring money from my account into your account. And what Prosper.com does is it manages it kind of checks your credit worthiness so that transfer can happen.
I know. I'm aware of some startups that are based in New Zealand around that similar kind of idea as well.
Yeah. The one that is in the magazine is called Nex, NEXX, which is due to launch later this year. And then there's kind of the classic broking thing. Have you come across fundit.co.nz?
No.
So this is kind of reverse broking. So Wammo loads up all his information and says, I need a mortgage for such and such. This is my story. This is the amount I want to lend. And Fundit go out and they make all the mortgage brokers and the banks bid for your business. So it's a kind of a reverse situation where instead of you going and begging for mercy from a bank, they come and bow before your feet and try and win your business.
I like the idea of that.
Good, isn't it?
Yeah.
That's good. Yeah, so it's kind of interesting. I mean, this is a very interesting article. I personally don't see a problem for banks. I only see an opportunity. But, the really exciting thing is that in New Zealand there seems to be a lot of innovation in this space. There
is indeed. Vincent Heeringa, thanks so much for informing us this morning. Of course, people can read up more about this in the latest Ideologue, was it?
They can. It's on the bookshelf now. It's got Jeff Ross on the cover.
And also, eventually, of course, online as well, ideologue.co.nz. See you next time, Vincent.
Thanks, Wammo.
Track now.